Circle jumps nearly 20% as crypto stocks rally on Clarity Act push Circle Internet Group closed up nearly 20% on Monday, leading a broad rally in U.S.-listed crypto-adjacent equities as traders priced in a higher probability that Congress passes the Clarity Act market structure bill in the current session. Coin Bureau flagged the move shortly after the close, citing the Senate compromise text published over the weekend as the proximate catalyst. The rally is notable because it arrived on a flat day for spot crypto. Bitcoin sat at roughly $87,700, absorbed 0.9% over 24 hours. Ether at 2376, 0.2%, and Solana at 8468, 0.7%, as of May 5, 2026, with the Fear and Greed Index reading 48, neutral. Equity desks moved on legislative odds rather than token price action. The Senate text resolves the issuer yield fault line. Last week's Senate text resolved the most contested fault line in the bill: stablecoin issuer yield. Issuers like Circle would be barred from paying interest on reserves directly to retail holders, but exchanges and other distribution partners can still build reward programs on top of the underlying float. That distinction matters for Circle because it preserves the distribution economics that drive USDC supply growth without forcing the issuer itself into bank-style yield products. The bill also clarifies the SEC versus CFTC jurisdictional split that has hung over the industry for the better part of 3 years. Spot crypto markets fall to the CFTC, token issuance, and certain DeFi structures stay with the SEC. The text is not final, but the path through committee now looks clearer than it did in March. Three reasons traders cited Monday. The compromise pulled in moderate Democrats. Senators Tillis and Brooks issued a joint statement explicitly endorsing the yield ban language, which neutralizes the floor strategy that had stalled prior versions of the bill. Rate cut tailwind. Fundstrat's Tom Lee restated his view that equities, including crypto names, are not on hold pending geopolitical resolution. With Kevin Warsh openly arguing for 100 basis points of cuts, the discount rate math for high-beta crypto equities has improved. Earnings setup. Circle reports later this quarter, and a past Clarity framework would let the company expand U.S. distribution faster than its base case assumed. Coinbase, Robinhood, and the major U.S.-listed miners also closed green, though none match Circle's percentage move. The single stock concentration suggests the market is betting Circle benefits disproportionately from a clean stablecoin chapter in the bill, not a generic crypto wins thesis. A 20% rally is not the same as a past bill. A 20% one-day move in a crypto equity is not the same as the bill passing. The Clarity Act still has to clear committee, survive floor amendments, and be reconciled with whatever the House sends back. Coinbase has already objected to specific provisions of the Senate compromise, and the stablecoin rewards language is still being lobbied on by both bank trade groups and DeFi advocates. For SpendNode readers, the more durable question is what happens at the card and wallet level once a final bill exists. The yield ban on issuer reserves does not touch stablecoin spending products or exchange-distributed cashback rewards, which is where most of the user-facing economics sit. If anything, codifying the issuer-distributor split could push more reward dollars toward the card and exchange layer rather than the float layer. Numbers worth tracking. A few data points to watch over the next 2 weeks. Whether Circle's USDC supply continues its recent expansion or pauses on legislative uncertainty. The CME crypto equity options, SKU, which had been pricing significant downside before Monday's session. The next Senate Banking Committee markup, which is the next procedural gate for the bill House response, which has historically been slower to converge with Senate text on stablecoin issues. If the bill moves on schedule, the Monday rally will look like a reasonable repricing. If it stalls, it will look like another head fake of the kind crypto equities have absorbed repeatedly since 2023.